Hello everybody, I'm John. This is Strategic Investing, and the stock market is freaking out a little bit right now. We have a lot of stuff going on with Japan, in the Middle East, and we have fears of a potential recession coming soon. And so what I want to talk about is what this means for the main stock that I cover on this channel, Xtract One Technologies. So what I want to talk about and what I kind of want to do first is go back to the last recession that we had, the last time we had a lot of fear in the market, and see how Xtract fared back then, and kind of use that to give us maybe some insights into what Xtract One might be able to do, how the stock would perform, when there is a lot of fear in the market, if we do continue to see some of this fear around recessions and things like that going forward. So what I want to do first is go back to the last recession that we had. And you guys might be thinking, well, the last recession was like 2007, 2008. But technically, the last recession that we had, and speaking specifically about the United States, which really is Xtract One's main market right now. I know they're expanding internationally, and we can talk about that. But the last recession we had in the United States technically was in 2022, because the technical definition of a recession is 2 consecutive quarters of negative GDP growth. And that's exactly what we had in Q1 of 2022 and Q2 of 2022. And if you guys remember, during this time, we had a ton of inflation. We still do have some inflation, but inflation was growing much faster and much higher back in 2022. The S&P 500 in 2022 was down almost 20% to finish the year. So we had a lot of pain, a lot of fears in the market. Interest rates were rising. So how did Xtract One do in 2022? Well, in 2022, Xtract One, while the S&P 500 was down almost 20%, Xtract One was up almost 40%. And actually, in the year after that, in 2023, it went up over 40%, almost 43% in 2023. So in a year when we're having a ton of fear about recession, we actually technically did have a recession. The S&P 500 is down almost 20%. Xtract is doing 40% in that year, and on top of that, another 40% in the next year. And keep in mind, this is a time when the Fed interest rate, right, the federal funds rate, rose from essentially zero to almost, or actually just over 4% by the end of 2022. And really, we kind of knew it was going to go a little higher, so a lot of that was probably priced into the market as well. This is really probably the worst time in the market for microcap stocks with not so great cash positions like Xtract One was at the time. And still it performed well. It performed phenomenally, really. 40% gain in a time when the S&P is down 20% and you're seeing interest rates rise the way they are. That's extremely impressive for a company and a stock. And part of the reason for that, arguably the main reason for that, is the company was executing, right? If you look at this time period, now we have fiscal year 2022 here, but because Xtract One's fiscal year doesn't quite line up with the calendar year, I've highlighted the portion that best matches the calendar year of 2022 here. So let's just take a look here at some of the main metrics. Platform backlog in 2022 grew 178%. Platform revenue grew 746%, and signed agreements pending grew 88%. So this is what they were able to do during a time when the market really wasn't showing a lot of results. The S&P 500's down 20%, and the stock gets rewarded because it's one of the few companies that's still able to grow, still at the time not close to it, but showing signs that it's on its path to profitability as well. And so this is, companies that grow, companies that are able to execute through those hard times, the stock price gets rewarded, right? And so let's take a look at kind of what we're seeing now in comparison. And the last thing, or I guess the first thing to do a comparison here, because Xtract One is actually in a better position, I think we would all agree, and the metrics show it, than they were back in 2022, even though they were in a really good portion. Let me just show right here. This is the price to sales ratio. This is if we look the 54, if we look just at platform revenue, because that's really kind of the main focus of the business right now, the main segment that looks like it's going to be driving the vast majority of the revenue, at least at this point. That on a price to sales ratio, the valuation of Xtract in 2022 calendar year was 54. If you take overall revenue from Xtract as well, it was still at 26. So we're trading at a pretty high price to sales ratio. Even back at a time, and the stock was still rewarded at the time because just the growth was so good, right? Now we're in a much better position. Now we're looking at a price to sales. If they're able to execute on what they are planning on doing in Q4, and we know that in the Q3 earnings call, Peter and Karen both said that they expect revenue to be higher in Q4 than it was in Q3.
We continue to focus on accelerating our top line while also increasing the amount of recurring revenue as we remain on track for a record year of performance. As Peter mentioned, we currently anticipate Q4 revenue to be higher than this past quarter.
If they're able to execute on that, then we're looking at a price to sales potentially under 10, right? We're talking about a really good valuation there. I mean, there's a lot of companies in the S&P 500 that have a price to sales of over 10. So just to kind of summarize this whole thing, what we're looking at here, if you look at the last time there was a lot of fear in the market, fears of a recession, technically an actual recession, the S&P was down almost 20%, interest rates rose from 0 to 4%. During that time, Xtract was able to execute and the stock was rewarded. Now what we're looking at, we do have the same, fears in the market of a recession. There's other things going on as well. And what are we looking at as far as Xtract One? Well, they're looking at a better valuation right now, a price to sales potentially of under 10. Revenue, backlog, and signed agreements pending are still growing exponentially. We also recently had DHS designation, which is opening up so many more doors and avenues for growth there. And we arguably have a product that in many cases, especially when you talk about schools, hospitals, government buildings, is really more of a need to have rather than a nice to have. And so when you talk about a recession specifically, when, cash is tight, businesses are looking to cut costs, you have, a lot of these customers, when I talk about that, the schools, the hospitals, government buildings, this is something they might still need and want to purchase even when cash is tight because it's such a necessity to have that safety and security in those types of venues. And even when you look at, stadiums and arenas and other entertainment venues like that, this still might be a good sale for Xtract One here because these companies will be looking to cut costs if if we do actually go into any sort of economic hardship or recession. Companies are going to be looking to cut costs. Companies might even be looking at shrinking their employee base, shrinking their workforce, potentially even the security workforce. Well, how are they going to be able to do that and still provide the same level of security? One of the ways is by going with Xtract One. We know it takes less security personnel, it's easier to run, it's more efficient, and it actually gives you better security than a standard walk-through metal detector. So even those companies where you might think, maybe they won't shift because we're in a recession, they might not be bringing in as much money. Well, that actually could be a reason that they want to go with Xtract One even more than they would in better economic times. And so from what I'm seeing, from what I just laid out, and from the last time we had a similar situation in the market, it seems to me that Xtract One is a company and a stock that's going to be able to perform and to execute even in a tough economic environment if we do get that going forward. So I think that's, just something that I wanted to get out there. If you guys think that I missed anything, if you guys have anything to add, whatnot, definitely leave that in the comments below. I'd love to hear what you guys have to think about this topic. Other than that, I'll see you guys next time. Have a great rest of your week.